Hey, what's up, fellas? Good morning. Can't lie, I'm tired as shit. Goddamn. I'll be yawning. Let's see what it is. Excuse me. Goodness. A little earlier than I'm used to. But this morning, right, let's go to a high time frame. So we're kind of consolidating heading into CPI, not surprising. Really, let's see. I would want to see, when we're forecasting prior to CPI, it's really just a guessing game, right? Letting you guys know that first. We can have our liquidity levels, but really it is just kind of random. And it's going to shoot rather aggressively in one direction. So I just like to have the liquidity pools here so we can kind of follow and interact with that. Let's see. If I had to pick a side, I do think that highs would be the first target. If we're going to go one-sided. Just because, right, I'm looking and we have just hit and refilled this 1 hour fair value gap fully. Look at this. And then, as you guys saw, right, we had just hit a weekly order block. So we're sitting inside of a weekly order block right now. We're holding these new week opening gap levels. And we keep on taking lows, right? Taking lows here, take a low, come down, take a low, come down, take out a low. And then one more time yesterday came down to take that low while still holding that new week opening gap. So yeah, if I had to pick a side, I would like to see, because right now we're using this fair value gap. After we get underneath it, we've gotten back above. We're using it as support. 15-minute, we have a fair value gap there. So I don't want to put too much weight into these PD arrays, but if I was going to follow price here, and we were going to move in one direction, right, we'll just continue to say I would like to see just highs. How long do we got? 45 seconds till the fireworks, ladies and gentlemen. I'm going to clear up some of this. So, right, so we have, let me get my, here. I was like, should we paper trade? Hell no, that's sketchy. All right, let us see what we get. And obviously, if we're gonna go with the sell side, here. But I'd like to see us go up. Oh. Boom. Buy side one. Buy side two. Buy side three. Right, we're hitting yesterday's midnight. That'll be important. So, right, this is kind of what we would expect. Pick up stops first. Holding the inversion, right? Holding the 15 that we just labeled. But you see what we're hitting, right? Breaker. High, low, higher, high. Midnight level. So hesitation makes sense, but would want to see us get up and through that. Say if fair value gap gets left here, really would expect that to deliver us higher. And just so you guys can see what I'm referencing, right? We're hitting that. Yesterday's midnight is what we're hitting, right? Look at that. So we've closed above it just a little bit, which makes me think I'd like to see a continued run. All right, so see if we don't get a institutional order flow entry here. Like if we're gonna push higher aggressively, I'm not trying to see it come back below this high here, right? The old buy side pool here. So far, though, rather lackluster CPI compared to usual. Right, we did get our buy side objective, just one of them. Usually we would kind of move more aggressively. Let's see. Yeah, only 12 handle moves so far, so that's not too much for a CPI event. But right, back into the old high, so let's see if we can't hold here. I'd like to find support at this high if we're going to bounce. So far, so good there. So we could wick into the consequent encroachment. I'd prefer bodies hold this level here, though. So like I said, if we start coming back into this, that's a little uncharacteristic of usual CPI, to be honest. So we may refill this in, come back for the lows. Usually CPI is not a whipsaw event. It's very much a one-sided attack liquidity, which, I mean, we kind of got that in the short term. But you see how now, right, we're reversing on that. So this seems more almost like a FOMC type of delivery so far. Let's see what we get. Let's see how this candle closes. So right, not ideal. We're holding the fair value gap, but we're closed way below consequent encroachment now. We're closed underneath the buy side. So we may actually bearish volume imbalance. Yeah, we're going to come back for these lows, I think. So a little different morning than we were kind of expecting, or at least I was anyway. Rather interesting. With the 5. Notice on the 5, look at that. That's all a wick. Wow. What's the 3 minute looking like? The 4 minute. So it's only the 5 minute that's wicked. I mean, I guess the 15. Let's see how this 5 minute closes quickly. Oh yeah, interesting. Notice that, wow. So really, we haven't gone anywhere. We opened here, all the way up, all the way back down, closed right on that opening price. Yeah, that's interesting. Did not expect that, to be honest. Kind of, I guess, like I keep repeating, I was expecting more of a one-sided delivery here this morning. Could still bounce. We'll see if this 830 doesn't want to hold us. If we can hold here, get back above this bearish fair value gap, we can now use that as the inversion. And I'll be back for those higher prices. Usually I wouldn't like this volume imbalance closing underneath 830. But this is an instance where, notice right when we close underneath, we actually snap right back into that range with a new one. So when I see something like that, I kind of negate this candle closing underneath. So like I said, right, attention is now here. Just want to see if we're going to hold this, if we're going to go lower, right, we're going to hold this fair value gap here. Ideally, if we can get something to where we get above this, while also getting above this, and then let's say especially we leave a fair value gap, this would be a pretty good area to look for support. But I would like to see the candle close above both this fair value gap and the old high. at the same time. See what we get. Oof, close right back inside that. Volume imbalance there. So I don't want to see the volume imbalance play out as we would expect here after hitting this candle's close. I want price to continue to run. If I'm wanting higher prices, I'm not trying to see price hesitate here. Because then we're either going to consolidate or come back down one more time for the lows. But geez, fellas, I got to go bathroom real quick. So entertain yourselves for a minute. Right attention obviously here, so monitor that. Be back shortly to see how it plays out. We back. Okay, look at that. Fair value gap off of buy side into sell side. Back into the midnight level, into the new week opening gap to clear the actual sell side. So yeah, this is rather an interesting CPI, to be honest. I've seen this very rarely occur to where we are, right, more of a whipsaw CPI. We've came out to clear buy side. We've now reversed to clear sell side. From here though, I don't want to see if we don't want to continue that bearish delivery. So check this fair value gap out. In my mind, if we're going to continue bearish, midnight should hold us, get us back underneath the new week opening gap. Because we already closed underneath it once. Wake up. I'm already awake. 10 handles. Oh, good shit, man. Yeah, that was clean. All right, so that holds us into the 10 handles or whatever. Would that get you? Oh. Yeah, that's about it. No need to be greedy for more. The pain. Let's see, the 15, oof. But see, I don't like how the 15 closes inside of the new week opening gap after running sell side. So we might have to wait till honestly later. Ooh. Okay, I think we're gonna come back up now. If we're gonna close like this. Yeah, rather ugly delivery. This almost seems seek and destroy in a way. Is it forming? Oh, there we go, Kath. As I say it. Yeah, I'm getting pretty seek and destroy vibes, really. What's to say? I gotta be honest, a little surprised, right? Usually CPI is just very one-sided. Very rarely have I seen it deliver kind of like this to where, right, up and down, back up again. I got long on this volume imbalance. So if we can get to this one, I'll close just quick. I'm already at break even. In like this. So I'd actually want to get, what's the inch at? 45.0, or actually no, 45.05. So entry came here, stopped right under midnight. Already got 5 handles, could probably close. I want to see that volume imbalance though. Hell no, I'm actually gonna leave it. I'm gonna let it run. I'm gonna use my stop instead. I think we're gonna come back now. Up. Yes, sir. So what I'll actually do, if we hesitate here at all at this fair value gap, I'll close it. But as long as we're showing this energetic movement, right, I'm gonna let it run. My stop loss is underneath this candle here. I'll just show you guys. So I don't gotta explain it every time. So if we close it all here, I'm just gonna close it fully. If we close underneath this fair value gap, we could probably still push up and through it, but I don't want to even play with that at all. And we're already above 5 handles, so it looks like we're about to close. We'll close there. All right, not gonna be greedy. There we go. So there's a quick little CPI execution. Something happened on Zoom. We don't see the screen. That stay happening because Zoom's garbage. No, I'm just kidding. Hold up. All right, what about now? What about now? No, we probably could still run. I wanted to get more contracts. Like I would have partialed and let it run here, but it's all right. Damn, see? It'd be holding me. I'll go like this. This should make it easier to see. So see, glad I closed it here. He said, are you saying sell Zoom? Yeah, short Zoom, everybody. Now what happened to, what was the thing before Zoom? I'm already forgetting. Skype. We need Skype back. Skype had a 50-year head start, still got clapped by Zoom. Explain. But we'll see if we don't want to continue running. Right, for this entry though, just quick explanation. We're getting back above sell side. So purged and reverted. Right, purge and revert plus inversion. So I'm already expecting this to become an inversion once we close above its consequent encroachment. And now, especially when we open with the volume imbalance. Right, pretty clear entry signal for me. So as we come back down into it, even got a better entry, a little bit lower, right near that consequent encroachment of the inversion. And we get out about 8 handles, so. I mean, it's not a bad one, Matt. I would have preferred no wick here. It's a pretty small wick, so I mean, that's still pretty valid in my mind. 5 minute. I mean, in the short term, I'd like us to hold 8:30, but yeah, this here. If we came down into it, I'd still give it a chance to find support within this. Right, that's that fair value gap as well. So we could actually come back down into this. Because we've just made a short-term low. So like, say we want to do one of those things where we hesitate first, engineer just short-term liquidity. I could see us running that, bouncing off 8:30 level, and then coming up and through this fair value gap here. At this point, because how this fair value gap is treating price, if we were to get above it, right, push up and through it, I would really look for it to support price now for higher prices. Because right, not only have we used it once here to deliver us into sell side, but now that we're back in it, we're still finding resistance, right? So it's going to be important in my mind, especially if we close above it with another fair value gap. Really kind of the same thing we're looking at here, right? If we can close above this fair value gap and close back above the old liquidity pool. So if we can close above this fair value gap and close above the old liquidity pool, that'd be beneficial for longs. Interesting. Damn, it's tempting me. Now we're gonna paper trade this one. Pre-CPI, I don't want to trade too much, but we're almost getting the same exact setup here, right? We're pushing through the fair value gap. We're getting close. We've just made a volume imbalance after hitting the high of it here. So I'd like for this candle, what we'll do is we'll give it a little bit more confirmation. We'll see if the volume imbalance doesn't remain open first. If it does, then we could look to use that to get us back into some highs potentially here. And this one's a little different, right? I'm not confident using the volume imbalance entry here opposed to here because this candle has not closed. Let me go. Like this. Oh, wait, let me move this line. Bruh, let me get back to it. Okay. So, right, this candle here never closed above the consequent encroachment. So that's why I'm not confident entering as soon as we hit this fair value gap the same way that I would have here. Right, because had this candle done that, that signifies to me a willingness to continue higher. Whereas something like this can simply be, right, just hitting that consequent encroachment to hold. So that's a little insights on how I kind of, right, filter out which entries I'm using that volume imbalance entry on. I need to already have a indication that price is willing to go higher, right? So seeing us close above consequent encroachment and then open with the volume imbalance, that's price willing or showing a willingness to go higher. Whereas in my mind, this one, even though we have that volume imbalance, it's underneath the consequent encroachment. So I'm not as comfortable trusting it. Damn, is it? Let's see. Hopefully just for you, Cal. My recording says it could hear me. Leave and come back, Cal. Sometimes that might help. So I still would prefer higher prices, honestly. Because we have a new 5-minute volume imbalance. And the 5-minute is also the 2-minute. So yeah, I still have that same belief. If we can close above this fair value gap, I'd like that for inversion to support us. So that's what I wanted to see here. So I actually like the idea. Oh my goodness. I like this idea here. I tried to enter here on this volume imbalance. You know, I like this one here. I do like coming back into it. It's a 2 and the 5 looking like. Yeah, I like that actually. So I like this order block here. And right, we close not only above the fair value gap, but the old buy side pool with displacement left behind the fair value gap, just like we wanted to see. I'd like to see how this paper trade runs. I'll paper trade this one. Hey, what's up, CY? Have I missed? Nah, not much. I guess I got long. You missed one entry, long entry here. Potential second one. Using a volume imbalance here. I want to see if I can't get another one though. To stack. Got the uneasy feeling we're about to just run though. One thing that is helping us though is the 930 opening. So we may want to leave that high intact until then. Which we still got quite a bit till that happens, right? So if we're not gonna like say that this high to this low, so this is the current dealing range that we are within. That's not the right label. Say we want to hold right within this range until 930. Then I would actually expect this last discount here to hold us, right? That's kind of what we would often see. To where if we're not going to run a high, the last premium, sorry, not discount. The last premium in this leg should probably hold us. Which for me, I kind of really am just seeing as the, well, one, we have a rejection block here. So we would look for that. And two, I mean, that's really the only premium I see, right? Besides, I guess, this inversion fair value gap. So let me take off the dealing range. We don't even need that. So we have, right, this inversion. Because we close underneath it, so now it could be an inversion level, and you see that's what we're hitting. So right, this is what I'm saying. This is kind of the last premium before the highs. So if we're gonna hold from somewhere, I could see it being here. We might miss entry here. What I'm gonna do? No way. Is we'll go in on the volume imbalance first. If we run a low again, then we'll stack, adding more as we run this low, looking for this original entry. I did get in on the actual fair value gap. And my target will be, my final target's going to be highs, but I'm going to partial out of 5 handles. See if we can get there. And the short, oh yeah, and the short. Just a weird CPI, definitely. Like I said, this is definitely a little bit uncharacteristic for a typical CPI event. Like I said, this is giving me very FOMC vibes here. So my stop has been moved just barely. It was underneath the actual inversion right here. So I'm actually going to move it right to this candle. Because I really would not want to see now the fact that we've institutional order flowed into this fair value gap. I would not want to see this fair value gap slow be breached. So that's why the stop is under the candle. Right, understanding there is a volume imbalance here, but this is an instance where I don't want to see this traded into. This one here we can trade into. But we're going to just run. Mm. 45.2175 gets me partialed. Okay, there we go. So we're partialed. Stop losses break even. I don't know if I'm gonna get this entry, so I guess I'll just play with this. So right, the entry came like this. This is the original framework here. Right on the fair value gap, stop underneath the inversion. Okay, so we've just partialed out. So now my stop is here. Right, I can't obviously move it because we're not in the position. But my stop is slightly above. It's right underneath this volume imbalance. I don't even think we're coming back into that though. So like what we can try to do, right? I'm not gonna do this for real, but to follow price, we're gonna see if this now wants to become an inversion. And right, we have a fair value gap here. So I've already partialed out. I've secured myself paying partials. My stop loss is not even in right risk. So it's a risk-free trade with money already secured. Which is why I'm not trying to add here, right? This is just a paper trade to gauge if we're going to continue. Because like we said, right, if we're going to hold until 9:30, the dealing range, well, what have we just hit here, right? This is the rejection block. That's why I'm partialing. Because if we are going to hold the range, this rejection block is going to hold us, and we're going to deliver back into this range. And it looks like that's what's about to happen here. All right, so we might come back down for this low now, which you really could still buy from there. He said I can't partial. That's all right. No partial, I would have moved my stop to break even. I would have just been out right there. He said got beaten. Yeah, that's tough, right? The hard rejection. But that's why it's very important to know inter-range liquidity points. Or not even liquidity, just places to offset positions. And obviously you can't partial because you had one contract. But like if I'm doing that, right, I'm using my stop as the... Just using my stop as the partial. Mm. $500 securities should have. Well, if you were on the volume imbalance, oh, you could have got 5. Yeah, Matt played yourself. No, I'm just kidding. It happens. Right, notice how we came back into what? A higher time frame. And we actually hold there. Oh, but now we have a bearish. Yeah, this is CPI is actually hideous. Like, what the hell are we doing here, CPI? Make up your mind. What's this looking like? High, low, higher, high. Broken. Fair value gap. At the same time, low, high, lower, low. Still on the 5. As long as we can hold the 5, we have the potential of going higher. I think if we get under this 5 minute at all, we're going to come back for the 830. So I think we push back through this fair value gap. We attack this low. We come back for this untouched inefficiency paired with the 830. Geez, so yeah, look at that. Volume imbalance, bearish volume imbalance, wick. Really all playing around still, just that buy side pull though. That's really what we're playing around. Who's that? That's some good humming ability there, RJ. I think that's you. Love it. No, you good. I'll be on that. That's always funny. Let's see if we can close. If we can close under this, I do like looking for an opportunity to ride price lower. We gotta wait for a closure. I like that actually. So that was ideal, but notice how we close it in. Ideally, we want this to remain open because then we'll have created a bearish volume imbalance while leaving and breaking underneath this one. Right, we'll also respecting. So the same fair value gap that we used higher, right? Hesitate. We get back underneath, close underneath here. So now we want to see if it becomes right resistance again. But now we close it in and open with, right, an opposing volume imbalance. Wouldn't want to see something like that. We would want this one to close in now, because if we push up, right, I think we just continue to bounce, consolidate here. Because the 5 minute is still actually holding the 5 minute pretty well. Okay, but however, notice now that we have closed the 5 minute in here, we do have this. So we legitimately have two opposing PD arrays. We're right near equilibrium. We're playing around the old buy side pool. Yeah, I think we just consolidate till 9:30, to be honest. Especially if we close this one in, we might just bounce till 9:30, to be honest. Take a quick 15-minute break. So yeah, let's decide that. If this volume imbalance gets closed and we don't leave it open and we come back down, we'll dip for a little bit. Just because I think we're going to just consolidate. Price doesn't seem to be in a hurry to move anywhere right now. Right, it's already kind of done the damage higher. Ran all those buy stops. Did the damage lower. Cleared out all the sell stops. So we barely leave it open. Yeah, Chris, daily bias don't have any. It already met both of my objectives. Right, had this buy side here, had this sell side here. And we came up to run the buy side first, then rejected, right, fair value gap to run the sell side. And that's what I'm saying now at this point, really no bias, especially because we're just playing around this fair value gap. Old buy side. Yeah, it is August, fellas, so. Right, like we said, we can kind of expect this price action to continue, which is unfortunate, but it's all right. We could trade within the range, right? It's possible. It's just a lot higher. I almost said higher probability, higher resistance, not higher probability. I like this. So what we need to see here, okay, because we have opposing PD arrays, is for this volume imbalance to actually be traded up and above. If we can do that, in my mind, that'll be an indication that we are leaning more bullishly because we've been respecting, right, this volume imbalance, this one. And as far as wiki, right, where are most of the wicks? Well, the wicks are higher, but now the bodies are starting to press up into these wicks. Like, let me take this wick that we created right on the news event. Consequent encroachment really should have held it if we weren't going to get above it. So the fact that we're above it just leads me to believe in the long-term macro sense, I would like to see price continue to run. But remember, now we're hitting that. I mean, legitimately just, right, I don't like that at all. The volume imbalance is the old buy side pool. And the high, right? So notice how we're just, yeah, literally getting smushed between these two PD arrays right now. Breaker on the 5, wait, is there a breaker on 5 minute? I'm sure there's one, let's see. Low, high, low, low. Yeah, this would be a breaker, low. I mean, this is ugly breaker, but like when I see something like this, okay, it's kind of tough because I'm ignoring this wick. Like as I look at price right now, this wick on this time frame, right, it's almost like it's not there for me. So like when I'm looking at the breaker, it's this from low, high, lower, low. that gets broken, which we do use it right initially, push up and through it. On like a higher time frame sense, you could even go this low to this high, all the way down to this low. That now just got broken with, right? Notice on a 5-minute chart, we have broken this high here with a fair value gap. And that's the only fair value gap besides this one, of course. I don't like the fact that we did close underneath it though, because now we're using it as an inversion. So yeah, very difficult read this morning for CPI, fellas. If you're getting beaten around or just lost, don't feel bad. Even with me, a lot of moving parts going on here this morning. My wife is about to pop. You still could take off August, brother. That's funny. But yeah, congrats, CY. That's hype. Is that your first or not? Dang, first one. That's wild. Whole baby daddy. Oh, a little boy too. That's hype. Second generation trader in the works. Out the womb, Michael's playing in the background. You're just playing his spaces instead of Beethoven music as he's been born. Could you imagine? Just the best trader of all time. Yeah, so we don't like this at all. This is brutal. And notice, right, we're just sitting inside this original fair value gap here. And this is why they're not one and done, right? Even though we've traded up and through it once, twice, 3, 4, 5, however many times. Price will continue to reference it. It's just a matter of picking up on the hints that it's going to want to do that. And like we said, we're really just getting squished between volume imbalance here, 5-minute volume imbalance, and this 5-minute, right? Opposing 5-minute volume imbalances. Back inside the volume imbalance. See what the 930 wants to offer us. And we don't really expect... Well, this will be a little different actually. So usually I wouldn't expect much movement at 9:30 following a CPI event. But because this CPI event hasn't really gone anywhere, right? We're really just consolidating. We might actually get a 9:30 Judas swing today. Good shit. Yep, that inversion was nice. Oh, yep, the inversion there. And that's the beauty of it. 5 handles could be caught anywhere. But at this point, oh, what the heck did I just do? Hello? At this point, we're gonna wait for a 930 volatility injection and then look for a potential setup. All right, let's building a narrative. This is why it's so tough though, because for the narrative, right, if I'm gonna build one, well, we've already cleared buy side. We've respected the premium after doing that. And now we've cleared sell side. We've gotten back above an inversion level, but now we're disrespecting discounts that we should have been using to go higher. And right, this is what's leading me to believe that we're just going to consolidate. Because remember when I took equilibrium? Look at that. All right, so we might want to come back into equilibrium again of the original dealing range because we haven't broken the higher low. I mean, look at the past, geez, 2 weeks. Really weak. And right, notice, right on August 1st, we start hitting that consolidation profile. Very random. And this is why we gotta learn how to trade within the range. So let's kind of run through some scenarios that would lead me to favor one side or the other. Right before this 9:30 opening comes around. Let's say that right at 9:30. So macro sense, I would still favor one more run into highs. Because we barely ran this buy side, but like I was saying, right, we still have other buy side pulls here that we could reach for. But what I would need to see to really confirm that is at 9:30 here, actually go ahead and create, even if it's just a mini Judas swing, okay? So run out these lows, how we're doing. We're doing it a little early, but we'll still see if it plays out. I'd want us to run these equal lows like we are, return into the 830, right into this fair value gap, really the 5-minute fair value gap like we are. And within this, then give me some type of buy opportunity, right? Ideally, I'd want to see some type of buy setup that returns back above the 830 level. And I would look to use that 830 level with whatever type of swing point or PD area that was formed for my stop to then target right higher prices. The thing that would kind of negate that whole idea for me is if we are to completely close in and underneath the 5-minute fair value gap. So we have just hit the low of it here perfectly. Well, so not really too much movement at the 930, kind of like we were expecting. We do have this bearish fair value gap. So now what I would want to see, right, to reconfirm my long idea is for this low to actually be ran out. Either that and then break structure, or really if we do push rather aggressively above this and create some type of inversion here, I would kind of like that. So we have done just that actually. Oh, perfect. So, okay. So we did exactly what I was looking for, really. We ran out this low. Just barely, right? Just barely, but I'm still counting that. We then displaced back above 830, back above equilibrium, and through the fair value gap. I actually got long here. Oh my gosh, I got a terrible feel. That's all right, we're pumping though. So I got long here. Stops at break even. Yeah, stops at break even now. 45.11 was my actual entry. That's brutal slippage. It's good though. So already 5 handles. I might take a partial here actually. Hell no, we're about to run, brother. I'm gonna leave that for buy side. First partial will come here at this high. Oh yeah, I'll show that one here. So we got in. So we got in here, right? That's actually a terrible fill. Which I probably should have partial. I'm not even gonna partial. If we get stopped out, whatever. The fill upsets me. But right, we got exactly what I wanted to see. So I bought on this candle, but it was already moving when I got in. And if we get stopped, it's all right. Right, we already cleared one here inside of this fair value gap. That shit really got me booty hurt though. It happens. Sometimes this, right, it's just too quick even for me. It barely gave me an entry. Oh, and we got stopped in profit. I think we might continue to push though. I might look for another opportunity. So there was one, right? Partial, stop in profit. I might try to go back in on this. Tupac back. That was a quick little one. Right, see, we don't buy here again. So I got in just in time, actually. Oh yeah, we're running. That's what I'm saying. Sometimes that shit moves quick. This even got me a little surprised. Fortunately, I'm already, and that's really the beauty of forecasting things before they happen, okay? Not trying to toot the own horn, but like say that, right, I was already expecting something like this. I mean, really, I was expecting exactly this. So that's what allows me to be able to execute so quickly on it, is I'm already expecting it to happen. So as soon, right, as soon as this candle closes, I'm ready to buy. And I still got, you saw a little slippage, a little slow because that blasted quickly. But if I'm not already expecting this exact formation to occur, I'm going to have no chance of getting long there. And right, I'm able to get long back here because I understand we're still bullish. We're in the bullish order flow. We were simply returning into the fair value gap. Right, my stop was too tight, unfortunately. But that's kind of why I'm fine with how I trade, because you saw I'm stopped in profit and now I'm able to go back in and I'm still going to secure, right, my original position, probably more. So yeah, we'll go way in profit. We'll close one at the high, right at this high. So we'll partial out here. So in the same way, right, we're very bullish right now. So if we actually come back into this fair value gap, I'm going to add one more. Right, because we fell short of this overall target that I still want to see hit. And now we've left a possible re-entry zone. Right, so that's how I re-enter. That's how I treat these. When I identify the bullish order flow like we are in now, any new discount that's formed is an opportunity to add a position if, right, the target hasn't been hit yet. So in my mind, my target is this buy side. And since it hasn't been hit, and especially because we've already partialed and we're stopped in profit here, we'll definitely go ahead and add one more if it gives us that opportunity. I mean, even here to here, say you didn't get any of this. Oh, damn. Give me that volume imbalance real quick. Buy. Yes, sir. Got 3 more contracts quickly. So he gave me another opportunity. There we go. Yeah, fellas, I think we're going to wrap this one up here. Because this was a fat trade for me here, actually. On my MT4 account, I actually took that whole thing up. So I got in on the same thing as my top step. But instead of moving my stop, because I treat my MT4 account a little differently than like these funded accounts, because I already have it secured, whatnot, you know what I mean? So I actually went in here, left the stop, added here, right? Once we break structure, then stop got moved up. So 2 positions, and like you saw, I actually added just barely, which that's going to be nothing. That's like a 0.025%. But hey, we still take that. So 3 entries, right? 2 restacking opportunities. I wanted one more. It didn't give it to me. But yeah, that was, and that's the beauty of waiting. God, that shit, see? That's why I love trading. Psych, I hate that. No, I do love it. I love the process. Just the understanding the theory. Because, right, we sit here, right, we had this objective all morning. I mean, this played legitimately right to textbook. What did we say? We said we're going to consolidate until 9:30. Okay? Which means that the last premium will hold us. Lo and behold, right, the rejection block on the 1 minute, the very last premium in this dealing range holds us to a T. Where do we return? Well, into equilibrium of the dealing range, like we spoke of, into the inefficiency in the 830. From here, what do we want to see? We wanted to see 930 run out a short-term low. 930 runs out a short-term low. Okay, this is the Judas swing I was talking about. And when I said it can be small, this is what I mean. Usually we're expecting a pretty aggressive Judas swing. No, in this instance, when it's CPI and we've already kind of had this aggressive move, this is all I need to see. So right, like we were expecting, we run out that short-term low. And like I said, right, I'm stacking here because this is the YouTube model. So my first entry comes on the inversion, right, getting in before the market structure shift. Second entry is simply the YouTube model, right? What's this? Short-term low cleared, market structure shift with displacement, fair value gap entry. And now our morning, yeah, our day, our week, we're done for the week there, for sure, for sure. Love that stacking. Oh, hell yeah, CY. Stacking is lit. Stacking is what exponentially improved my, I mean, not exponentially, kind of in a way. One of the last things I got comfortable doing, but if you learn how to do it correctly, oh my goodness. Like today, it's just, it's ridiculous. Because then you really just start, you keep loading, keep on loading up. Like if it would have gave me another opportunity here, gee, that would have been GG's to the market. But sometimes you don't get that. But now, right, so we still had these buy side objectives here. The fact that we bounce off equilibrium, like we said, okay, the bodies were reaching up into the wick. We push up and through that. Oh, we haven't actually closed above it. So let's say the 15 or the 5 or the 2. Right, if any of these could start closing above this old high, I like the idea of continuing to run higher. When you are stacking and you see price start to take off and not come back to your preferred entry, would you mark it in? Nope. So right, that was a perfect example here. First entry, stack entry, right? My second stack entry was, again, the fair value gap. We never get in there and we continue to run, right? So I'm not trying to chase this. If I have something like this and I don't get it, that's fine, right? I just miss it. Or I wait for the next opportunity. And you see, right, even though it was very tiny, I was confident entering there because we didn't hit this. So you can see, right, we hit the buy side obviously in this candle. But if you were watching it live, right, we saw first that when this candle opened, we had a volume imbalance here. We actually hadn't hit this before we tapped into the volume imbalance. Had we ran up into this first, right, I wouldn't have added another position there. I would have just let it rock. But the fact that we didn't hit that objective and came into the premium or the discount first is what was important to me. So, right, I'm never chasing, trying to market. I have my predisposed or my zones I'm looking for, and if it never comes back into it, then I just have to wait for the next opportunity to present itself. So right, no confirmation. So like had this candle closed above this high, right, continuing to kind of explain it, I would trust this fair value gap. Now, the only thing that's causing me a little hesitation is, like I said, on this time frame, I'm really ignoring this wick. So this high in my mind is kind of the structure point. And we have closed above this high with that candle, okay? So I actually would trust this fair value gap here. I would look for this fair value gap to offer us support to actually run this high one more time. So if we came back into, yeah, I like that actually. Because as we often speak of, right, we didn't tap this when I was looking for it, but it's an unfilled inefficiency. And now that we have delivered into the buy side target, we can come back into an unfilled inefficiency and still hold there. So I actually do like that, especially because, right, we have lows, relative equal lows. Yeah. We'll do that. Especially if we start engineering liquidity. So if we can leave this buy side here, we don't run it, we create this swing point. I'd really like that actually, because then we would have liquidity to run while returning into the discount and still having an objective. because I kind of want to use that volume imbalance entry right now, but right, just talking through my whole thought process, this one I'm a little hesitant on. Had this candle hit this fair value gap, I would go long on this volume imbalance as soon as this candle touches it. It's not even going to give us an opportunity anyway. Well, that whole thing doesn't matter. I guess I could finish the thought just so you guys understand, right, what gets me in versus what doesn't. Had this candle touch the fair value gap, I'm getting long on the volume imbalance. Because it didn't, and I still have the slight, we'll say, hesitation that this fair value gap could be hit, right? I'm not confident in using that. But now, if we leave this open, I'm confident using this fair value gap. And this would be an instance where if this does get left open, I actually wouldn't want to see this volume imbalance be hit now. But we may not even give us a freaking opportunity, brother. Price don't want us to be great. Yep, that's what this high right here is. Let's try this out. No. Very high risk. Just gauging order flow here. That's why I'm papering it. But right, this is even 5 handles, so that's what I'm saying. Can we get a quick ends model here? So our only issue is these. So we've ran this high and this high and this high. Oh no, wrong screen. I'm fake, fellas. Shit. Wait. What screen am I sharing? I'm confused. Oh my, I just ended the stream. We said you're getting nothing. Are we back? Y'all just watching nothing. You're like, what's happening? The only easy entry was at 9:33. 9:33. Fact. This was the bread and butter entry for the morning. And right, like I say, these are often higher risk. And I'm fine with taking these on paper, but this is where I like to simply monitor price when we're already close to objectives. Like say we come into this, I'll add another one here. Just want to see if we're going to continue to respect these discounts. And right, this one has my interest. And I'm thinking this might become a breakaway because this opened with a bearish volume imbalance, okay? So we opened lower than the close, but we couldn't even get back into this high, right, with the wick, and then we again displace. So when I see something like this, as I spoke about last week, when we kind of negate a volume imbalance, especially if it's aggressively, and then we create a volume imbalance off of that, we create a fair value gap off of the negated volume imbalance, I really like these fair value gaps. Because in my mind, it's kind of like the market saying that it had an opportunity to create a bearish volume imbalance and go lower. Instead, it doesn't want to. If anything, it rather pushes aggressively, creating a new discount. So if we are going to continue, right, the new discount in my mind should hold us. So like we'll see if we want to, well, I'm just going to add another one here. And if we run through this into stop, right, come back into this fair value gap, then we're just wrong. That's fine. But this is how I go about gauging, right, market flow, order flow. Doing this so many times, this is how I've learned, right, really which kind of fair value gaps I like to favor over the other ones. I was looking at the DXY at 9:30. Well, what were you doing that for, Mike? No, I'm just kidding. You could see this as a potential YouTube model here. Short-term low. Right, buy side, also market structure shift. Fair value gap here. But right, this is kind of the instance where ideally I would want this one to actually become a breakaway gap to where we might come into it. So I would be wrong. But like if I'm favoring buy side like this, right, I would ideally want to see price continue to run. Like we have a breakaway gap here, right, which I like. So I'd want us to really create another one. So this might be a measuring gap if we leave it open. Which if we do leave this open and it does become a measuring gap, this projection here is where I would aim for. This would need to stay open though. Full porting at 9:45, candle open. Wait, what candle was that? Oh. Oh, I could have. That'll crack me up. This one wouldn't even give you an opportunity though. I was trying to. But that's the volume imbalance. And that's also why I want this to remain open, okay? Because this candle that created the fair value gap didn't even touch its volume balance. So I'm saying this is a sign that price is reaching for something aggressively, which is why this fair value gap is the one that we trust and we don't want to see price return into here. That's beautiful. Partial. Stop loss under the low. Final TP, no. Right, we're going to use this as a measuring gap. So I'll close most of it here, but like we said, if we can get, I should have added, but no, we're good. We're gonna go 1. That'll put us just below the final buy side here as well. That's pretty nice. So we'll try this. All right, so we've already secured partials. Stop. Moved. Ideally, this candle closes above this old high. Because, right, this is the actual high we're looking for. This is external range. This is only internal range. Right here. So we've just hit this one. This is the one I want to see, though. So we can hesitate here quickly, but we need to get up and through it, really using this. Let's like watch to see if we can't continue. So if we come in here, I'll add again. Right, you just like I'm mentioning, if we're in this bullish delivery, you continue to add whenever it gives you the opportunity. Because like, let's see. If you want, if this was like a new entry in itself, a little big stop, 2.5. If we can tap this level before this level, I'll look to add one more. That's what I'm waiting on here. Oh, shit. We're gonna keep milking this bitch. If this candle closes below or above this buy side before hitting our target, I'm gonna go back on this buy side again. New to class. What's a measuring gap again? Oh, what's up, brother? So a measuring gap, okay? And this is a concept I know what it is, but I don't necessarily use it crazy often. It's pretty specific. In this instance, we'll use it. What we're gonna do though is I'm actually gonna close two more at the measuring gap projection, and then we're gonna close the final at that final target that we had, which is this high. But a measuring gap is right between your target. So you have to have kind of the narrative first. You have to have a swing low in a leg and then a really projected target that you're reaching for, okay? So this buy side here is my target that we've just hit. Love it. But anyways, right, this was my target. This is the swing point that originates the move up into the target I'm looking for. Now, usually halfway between your target and the initial swing point, there will be a fair value gap that forms. So surprisingly, right, if I was to take this low to high and put a midpoint on it, look at that. So we form a fair value gap right at the midpoint, okay? So when you see this, that's kind of like the beginning narrative of it. And the way it works is that you want this to stay open. If this stays open, the measuring gap is basically just a projection of how far we could reach from this gap, right? So I'm taking the low of the swing point to the very beginning of where this fair value gap starts. So this candle's really high, right? So I'm not taking the high of the fair value gap, I'm taking the inception of it. So from this high to low, and now you project that range, one range out, right? And I mean, you really can give it a few more, but this gives you really projections to like aim for. Say we didn't have something here, right? And you see how we did hit that nicely. But it's really more of just kind of a confluence, right? So I'm not like, obviously you can't enter on a measuring gap because, right, it's a measuring gap. If it's a correct measuring gap, it's not gonna be repriced into. But right, understanding measuring gaps is what gives me the confidence here to enter and stack inside of this fair value gap without any worry that it's gonna dip into this one. And that's why I'm fine with the stop being right here. Right, whereas some people might be nervous because there's two fair value gaps and it may come into this one. I understand it's not going to come into this one if we're gonna target this. And really, it plays out just as we expect, right? So you continue to add every time we tap into that. Well, I first added the volume imbalance. I added again at another volume imbalance. But as we come into the fair value gap, we're adding. And from there, as we said, right, we would have added here, didn't get the chance. We add here on the old high. Old highs that get closed above will become support. Wanted to enter again at this old high. Wasn't able to. Didn't get there, missed that by less than a handle. Wanted to enter on the volume imbalance. Didn't give me that either. And instead, reach for buy side. So now, fellas, yeah, we'll call this a day. My boy Matt passing funded accounts. Oh my gosh. Oh wait, no, I'm a golfer now. I'm a golf clap. But yeah, fellas, hopefully you enjoyed today's this was a clinic, to be honest. Hate to sound arrogant, but yeah. And when you understand we're in bullish order flow, I mean, this is when that shit becomes easy, right? This is the easy trading. Any discount, buy. Sell at logical areas. He said we could see. If only, Chris. I felt bad because we didn't have a stream yesterday, so I was like, we'll give you some sauce. Yeah, usually I don't go crazy full out trading. Or if I do, I'll just add one, but I realized we were going to be pretty bullish order flow, so I was like, yeah, we'll show off a little bit. Stack when we can. He said every day could be like this. No, to be honest, right, it's only certain days too. It's hard to have a day like this because, right, we need to be trending. Whereas like when I showed prior to this, look at the past few days, right? We're not really up, down. So it's still been pretty easy to catch some of the main moves. But when we get a price like this, that's very obvious. And we had CPI. So CPI, right? It was just a perfect storm of things leading up to a beautiful day here. And right, as far as live account goes, well, I shared the actual live account trade. So we had the inversion, bad fill, up into, this original here. Right, stack the position here into this original one as well. And then you guys saw that last little baby stack. I did actually take this one. So I didn't take any of these two, but the actual fair value gap entry I did. Targeting the buy side. And I partialed here at this high. I partialed again at the actual projection because it was so close. And then I got out fully here. So as far as live, just these three. 1, 2, 3, or I guess 4. 4. These were just the demo ones as well. $931 was the perfect trap entry. Was $931. The trap entry. Yes. NJ. Can't believe I don't know what that means really, I guess. The trap entry? Like we ran stops? Turtle soup, you mean, maybe? Is it 10 a.m. SB likely to be missed now? Damn, it's not even 10. What time is it? I don't know, that's how early. I forgot we got on an hour earlier. So at this point, yeah, I really wouldn't look, unless we're going to continue the measuring gap projections. Let's see what that 2 lines up with. Oh my goodness, that's pretty nice. Notice how that 2 lines up really with this old 1 hour fair value gap. But because of how, I mean, yeah, look at this. Let me clean it up a little bit. It's all crazy. So because we have had this huge aggressive move, I don't think I would expect I don't know, actually. Sorry. I'm just fighting it. Because I'm like, if we're going to continue to trend, we definitely will produce a silver bullet here. Either at this fair value gap or this one. Because nothing, I don't want to see anything in here be hit if we're going to run. Because what is this? I'm saying this high to this low is a BPR in my mind. Right? So I'm BPRing this out, which means that we're already efficient in here. So even though there's a fair value gap here, as we leave it, this is where, right, I want this to become a breakaway gap. Because this is a BPR. And that's why I would want, right, the fair value gap here or here to hold us instead. Ran the stop and closed perfectly for bulls. Oh, okay, I see what you mean. BPR with an unfilled fair value gap. Please. BPR with an... Oh, okay. Yeah, so I'm saying this is a BPR because when we make this initial dealing range from high to low, right, this is the new range. So let's just start with this as the actual range itself. So we have a new range here, right? We create a swing point. We reprice all the way into the highest premium of this range, high to low. Let me go. There's so many freaking things out here. All right, we're gonna clear that. Nope, want that still. Clear this. Okay. So right, we've came up and we've repriced on the 1 minute into all of these inefficiencies here, right? The rejection block, the 1 minute inversion. And then we come back down and tap, right, the actual equilibrium of this range here. Midpoint, boom. So we create a range, we reprice into its high, refilling all the inefficiencies. We retrace now below its midpoint back into now an inefficiency underneath the 50%, okay? So at this point, we're not saying it's a BPR, but when we leave this high, right? So once we leave the dealing range of high to low, as soon as we leave that, at this point, right, I'm not expecting price to return any lower than this low because we've already spent so much time in here, right? We've gone up, we've gone down, we've gone up, we've came back down, right? And we go up one more time. So that analogy Michael uses with the paint roller, we've already painted in here, right? Many times. So as soon as we close above it, really here, right? I'm not expecting any much of a deeper retracement. And you see, we simply return back into this old high. And now when we really leave it, right, with that displacement creating the new fair value gap, that is once again why I don't want this one to be traded into, because it's a part of this balanced price range here. Right, so if I don't want the BPR hit, I'm not going to want this fair value gap hit, which is why I'm fine entering above it here. Right, and it's not hindsight, it's obviously, I mean, we saw it play out live, right? Shared the logic beforehand of why this should not remain, or why this shouldn't be traded into and should remain open if we're bullish. And this is really the understanding why, right? It was the BPR, it was also the measuring gap idea I just talked about, right? To where if we're going to hit this buy side, the fact that this fair value gap formed at the equilibrium from this low to the potential buy side target means that this should remain open as well. And now on the 5 minute, right, that's what I'm saying. Because on the 1 minute, this is all, like I'm saying, this is already balanced in my mind. All of this. As soon as we really closed above with displacement here. So even though there is, like on the 2 minute, right, this fair value gaps, on the 5 minute, there's a fair value gap. Because it's underneath the actual BPR high, I wouldn't want to see it be traded into. Like if we trade into this, I think that we actually are going to come all the way back into the 830. Whereas if we're going to remain bullish, we should hold these higher premiums that were formed, right? So we have this one, and that's why I'm marking out, right? This one, we have a volume imbalance as well. We have old highs. I'm going to take this one off. That's inner range liquidity. But now we have this most recent fair value gap as we broke through the old high. So I like that because breaking through an old high with displacement and leaving a fair value gap. Right, so these are the three discounts I would want to hold. And I wouldn't want to even see price. I mean, at this point, I wouldn't even want to see price hit this one. I would want this one to hold or the volume imbalance and get us up here. Which potential YouTube setup here? He said, no, I want to give. You crack me up, yo. Y'all are hilarious. I'm glad to help, brother. That's all. I just want to help a little bit. This shit is hard, man. It's a lot of moving pieces, even for me. You just learn to process it a little bit quicker. Like, no doubt, 6 months ago, 8 months ago, I'll probably catch this entry. But I'm not catching this entry, right? Or this entry. I'm looking for this fair value gap here. Right? I'm not catching this inversion at all. I would have been way too slow. I would not even expected that to happen. So it's cool to see really my own progression through the teachings that I kind of, or the live streams I have for you guys. I think if we could say 804. Oh, August 4th. Oh, it was August 4th. Oof. I mean, right, that, like I said, that's the projection. If we are bullish now, if we're in a buy program, this measuring gap is projecting that to be hit. Right, because I took the right, our second one would get us up to really that buy side. Just short, I guess, but right, I felt if we were going to reach for this, we're probably going to reach for that as well. So I do like that. I just don't know if that's today, Chris. I don't know if we'll see that today. We might see it today. Right, CPI could be that huge explosive move that, or I guess CPI could provide the volatility to give us a large range day. Because let's see what the daily's looking like quickly. Nah, I don't know about that actually. I think we run all these highs, but I think we actually hold August 4th high for at least today. Could be wrong, but right in the long-term sense, if we do get buy setups, I like that. So if you are looking for long, so it makes sense. I just don't know if we'll continue to press that aggressively the rest of the day. Let's see, that's another, because we've already moved. Let's see, from the midnight, what's midnight at? Oh, from midnight. Move basically 40 handles, so we'd need another 20. So we'd almost need to double the range. Possible, but who knows? Macro sense, I do like that. It's like next week, until I'm given a reason to not be bullish, I'll look for longs. This here kind of has me, right, really primed for longs because we, like I said prior, we had been clearing lows how many times? Right, all the way from back here even, really. Right, cleared lows, left to high, cleared a low, right, left to high, cleared that low, cleared this low, left a new high, cleared this low, left a new high, and we've just ran that high and that high. So yeah, I'd like this high to be next. That high from our, right, fair value gaps that we have listed here. That would be my bias going forward. And you see how, right, we have really all these discounts here, but on the 15, it's just one fair value gap. So really you can look at it either way. And I mean, to be honest, I would usually start with like a 15. So I guess I kind of explain how I used to refine. So like I would start with a 15 like this and label this whole thing. Understand, okay, that's kind of large. I kind of want to refine it. So then I would go down to a lower time frame, right? And I would see how this fair value gap is paired with the 15 as we're breaking above, which is why I already favor that one a lot, right? This would be my most favorited fair value gap if we're going to use one. I then see, okay, we have another one here, right? This low ends up nicely with the low of the 15. So if we do need to give a deeper retracement, I would allow for this. Right? Favoring this one to hold us, allowing for this, but anything under this, I think we come all the way back down to 830. Screen time is the real secret. Yes, Cloudy. Say it again for the people in the back. That's facts. That's couldn't be more factually spoken. Get a golf clap for that. That's really all it is. Experience. And I always hate saying that because it's such a cop-out answer. It's you never know until you do it. That's really how it is, low-key. You just got to sit in front of these charts all day. Because like I feel like this was a good example, right? Me explaining to you why I want this one to hold and why I'm comfortable buying here. You can hear me explain it all you want, but you're not going to be comfortable to actually press the button yourself unless you're comfortable in it. And you're only going to get confident in it by seeing it play out. Right? It's going to be hard to, because as much as I guess you guys say, trust me, subconsciously it's going to be hard for you to blindly trust going long here when this is here if you don't already have the conviction that there's no need to go into the lower fair value gap. And that's really what makes it so hard is I can teach you and I can explain to you what it is I see and why I'm feeling certain things, but on that same note, right, I'm explaining that because I have the experience of seeing it play out so many times. It's really kind of like that whole, like the college thing you kind of spoke about earlier. Or like say you were going to be a doctor or a lawyer, you would never watch one surgery and be like, oh, okay, I could do that. Right? You never see someone do like an open heart surgery one time and be like, oh, I saw you do it, I could do it. That's goofy. But for some reason in trading, that's kind of the sentiment. People see others do it and they're like, oh, that looks easy. I should be able to do that too. When that's not how it is at all. You got to see it play out so many times. The thing I like to say, someone told me, is that you have to, you have to forget like 100 times before you remember. And that really stuck with me. Because I made the same mistakes over and over and over again. Because I would forget I was making them, right? But eventually, after making the same mistake so many times, I would forget so many times that I eventually remembered to stop making that mistake, if that makes sense. It's ironic. But hell, fellas, we have been here. How long have we been? It's a long one. A little over 2 hours. Hell yeah. We're going to go ahead and wrap this one up, fellas. Stick around for any quick questions. But pretty eventful morning, pretty clean. All right, we'll throw just these executions again. Got to screenshot them. What the? Bruh, if you don't let me drag that. Oh, and this came on the old high, so I need to pull this. Brother. The clumsiest. Hey, yeah, no problem, fellas. Top work. Glad you enjoy. Hope you hit fair. Hey, that's fire. See why? Thank you. That's the nicest thing. I'll say, unfortunately, my golf skills are a little subpar compared to my trading abilities. Hopefully they are on the same level one day. Hey, shot 5 above yesterday. That's like one of my best scores. But I'm just trying to get to par. I need to be par. I think it's time to upgrade my clubs too. Kind of got like a cheaper beginner set. I don't know if you guys have ever heard of sticks. I love those. The all black. But went with like a nice beginner set. Wasn't sure if I was going to play. But now that I'm actually grinding. I've gone, I think, every day the past week and a half. The dudes at work, they're like, bro, you here every day? You don't work or what? I was like, not really. I was like, I do work. It's just a different type of work. Damn, I'll be down, Loki. That'd be sick. That'd be the one thing I do. A golf meetup. Imagine. A scramble. The shadow scramble. Hold up. Oh my God. Stop. Y'all just gave me an idea. 2 years time, fellas. Got to set up the logistics. We'll get in the first annual shadow scramble going. What's up, Mr. K-Pax? Welcome to the chat. As we're about to leave. Now you know where it is for next time. Oh, well, welcome. Yeah, usually we're just chilling in here in the chat. From the UK. Okay. I think we have a few others from the UK as well. Hell yeah. Got some Brits. Or no, is that not right? See, I'm American. I don't know. Would you be considered Britain if you're from the UK? Or is Great Britain different than the UK? See, damn, showing my fucking, that's that American education, fellas. They don't teach us anything about anybody but us. I like the American accent better. What? That's comical. I'm glad. You should practice it. Sometimes I forget that we do have an accent. See, we're so ego-centered, bro. Americans be crazy. We really do be thinking we're the center. I'm like, I have an accent? What do you mean? No duh, fool. Stupid. Hungary. Okay. Oh yeah. Good question, Chris. Right before I'm about to leave. So for me, right, it was a very slow transition. And I've kind of explained how I went about it a few times, but what I had to do was get very comfortable with one model at a time. So like, right, I would have to get very comfortable with only looking for like, right, OTEs. So I would start with that. Only look for an OTE. Okay, right, once I get comfortable with that, only look for certain types of order block entries. Right, okay, once I get comfortable with that, right, okay, now I could look for certain fair value gap types of entries. And over time, as I started to get proficient with the models, I learned how they started to actually interact with one another, right? So like, let's say if an order block doesn't hold, but we form a volume imbalance, right? We could still trust that. Or if we form a fair value gap, but the U2 model doesn't form, I could still trust the fair value gap, right? So it's just a matter of really having to sit through these and understand how these concepts work together with one another. And that's kind of why I advise, like, first, like, get comfortable with, for me, I would say get comfortable with the U2 model. The U2 model is like the bread and butter framework that you could really use at any point. That's the highest probability, because then, right, it doesn't always have to have the fair value gap like at this one. But you've seen where we use the framework and instead use like an inversion or a order block or a volume imbalance, right? Or like an 830 level. So I like that U2 framework because it allows a lot of flexibility as far as the entry techniques with the PD arrays. But if you're trying to get to the point to where, right, you're kind of trading how I do now, which is I'm not trading any certain model. I'm trading, like you say, the algo. I'm trading what's present in the algorithm. Whichever PD array it's going to use, I use that. And that comes from having a full, clear-cut understanding of all of the concepts first and how they're going to be used. That way I understand, right, which ones aren't likely to hold, which ones are likely to hold, when are they likely to hold, right, when are they not. So it's pretty tough. And like this was a great example. Because like this right here is a U2 model, right, of that short-term low being cleared before we break structure at the high. And everything about this would say that we would expect this fair value gap here to be used because it's the U2 model. So if I'm using only the U2 model, right, I'm waiting for this and I'm missing it. But because I understand when the U2 model won't work, right, when higher discounts are going to be favored, that's what allows me to be just flexible with it and still catch the right PD array. So unfortunately, it's another one of those answers where it's right, the cop-out answer. You just have to experience it. You have to sit through the chart time needed to get comfortable with seeing all of these concepts. And eventually you'll be able to, right, pick and choose. And I do want to make it very clear, you never have to be able to even do what I do. Right, I'm very much we'll say try hard. Like I said, I wanted to know the why, right? I wasn't satisfied until I was almost like in Michael in a sense, to where I had multiple ways to enter given off of whatever was occurring in price at the given time. So I'm a little OD in that aspect, to where if you find something that works, a clear-cut U2 model, a breaker formation, right? You can be fine missing these. You don't need to be involved. You can have your limit here, your model, and sometimes you just don't get tapped in, and that's part of trading. So you really need to make it fit for your own personality. Right, but because I spend so little time in front of the charts, right, 2.5 hours max a day, I had to get proficient in being able to trade what was shown, right? Because I'd have times where I was waiting for a model and it wouldn't present during that session, so now I'm missing out. He said I shorted at 45.38. That is crazy, brother. Good luck. It's like putting a machine to, yep, like a machine. It's like a book that you got to read one chapter at a time, right? It's like a puzzle piece or a puzzle that you got to put together one piece at a time. All those analogies work well. Hey, good shit, Steve. Congrats, congrats. I hope you closed your short though, man. I guess I don't want to give signals, but that's a wild short, my dog. Sounds like you're just trying to fade me. How dare you? I hope you get. No, I'm just kidding. That's fair. We got different things. We see different things. So I think, look, now we got the YouTube model. So like this, I would expect the actual YouTube model to hold here. So like if this fair value gap gets left open, I'd expect that to hold back for highs again. Has to get left open though, right? That's kind of how we decide. If it doesn't get left open, then we'll just continue to poly chop. But hey, your shorts might work out, brother. Hopefully they do. Never wish ill will. Never wish no stop losses on anybody. That's hateful. But with that, all right. The classic fourth goodbye. We're going to call this the final one here. I appreciate you guys sitting in today. Beautiful day. I enjoyed it. Great end to the week, right? This will be our last session of the week. Quickly peek at news for next week. Got high impact news Tuesday and Wednesday and Thursday. Nice. So next week should be pretty good. We'll have FOMC minutes only, so not true FOMC. So we'll be good on Wednesday as well. So yeah, we'll be back next Monday, and we should be good Tuesday, Wednesday, and Thursday. Monday, Tuesday, Wednesday, Thursday for next week. As always, I'll send an announcement just prior, kind of setting the times when we can expect to meet up. But yeah, until then, enjoy your weekend, everybody. Hope you guys have a good time, relax, get away from the charts, spend some time doing things that you guys enjoy besides trading. And until we get back next week, we'll talk later. See you guys.